If you watch this channel for any length of time, you know that there is no housing market, right? On this channel, we talk about median home price, we talk about housing market, we talk about trends. But at the end of the day, there is no one housing market. We're going to pull up a report by Redfin, and we're going to really take a look inside the housing market and where the most pain is. First, what does this mean for you? Well, if you follow what I talk about, one rental at a time, I think you need to get a buy box. I think you need to look at it every day. I think you are best served by being in the affordable part of the market, right? Call it below the median, right? Again, you need to do the research in your area. Something else you've heard me talk about over the last 3 or 4 weeks is I think there are 3 tiers of the housing market, and they are all 3 acting different. First, luxury. I call luxury 2x the median for your market, right? If your market's median home price is 250,000, I'm going to put luxury at 500 grand or more. If you are in a market where your median home price is 800 grand, I am going to call luxury 1.6. Second, there is where the lion's share of the market is in what I call the move-up buyer, right? You've got your first-time home. You lived in it 8 years, which is average, and you want to move up. You have another kid. You got some raises and you want to move towns. You want a bigger backyard or a pool or whatever the reason is. You sell your first home, you buy the move-up home. And then, of course, there is first-time home buyer stock. This is the market that is being underserved by builders. They frankly can't do it profitably, so they don't build first-time homes. This means that we are playing below the median, and we are typically playing with older housing stock. In my market, it is not uncommon to have houses that are built in the 1960s or earlier, right? So they're 3-bedroom, 1 bath, right? There's not many homes built after the 80s that have 1 bath. So we are building in housing stock. So we're going to pull up a report from Redfin and see what they talk about the housing market and where the pain is. Let me just share it here. And here we go. So as you will see, Redfin is saying that the luxury home sales are sinking, the biggest decline on record. This is frankly what I've talked about, right? What we are seeing in the luxury market, my opinion, we'll pull up the article in a minute, is these are people that are invested in the stock market, right? Jerome Powell told us pain was coming. I have done reports on the top 1%, the top 10% being crushed by what Jerome Powell is doing, while the bottom 50% are actually ahead of the game. Yes, folks, the bottom 50% of Americans are up. Now, they're up on a percentage basis. The number is still anemic. I don't remember exactly, but they're up like 8 grand in net worth, while the top 1% is down 12% and the top 10% is down like, I don't know, like 11.5%, something slightly less. But again, luxury is hurting. And we've talked about that being the likely case. In fact, here, Redfin is saying that luxury homes are down 38%, while non-luxury is down 31%. Right? This makes perfect sense to me. Luxury home buyers can wait. It's not a must-have. It's a nice-to-have. And I think that is important. Again, these are, this graph is interesting because, again, it's year-on-year change in homes sold. This is transactions, folks, transactions. Lots of people want to talk price. It starts and ends with transactions. Again, this is something very important. Redfin is calling luxury. It's interesting to note the top 5%. Wow, the top 5% of the market. So in my earlier example, I said 2x. That might be actually 3x, right? So if your median is 500 grand, they're talking about the creme de la creme at 1.5. So yeah, the top 5% of the market, woo, that's some nice living right there. So what does Redfin really tell us? And why is luxury capitulating first? It's kind of what we've been talking about. Excuse me. Luxury goods are often among the first to get cut budgets during economic stress. Again, think about it. You're a luxury home buyer. You don't have to buy. You're already clearly living somewhere. You probably have multiple homes. You're gonna retreat, right? When your stock portfolio gets whacked 30%, you are going to move back. Luxury properties are frequently used as investments, meaning second homes. And I don't know if I agree with this. Luxury homes are used as investment properties. Yeah, I'd like to see that data. I'm going to disagree with that statement. Seriously, folks, if you own Park Place or Boardwalk, are you very much interested in renting that out? I don't think that's true, but maybe we just have a different definition. High-end homes saw the outsized growth during the pandemic, so have more room to fall. This is exactly right. This is what I call the second home or third home phenomenon. I do think this is something that will be unwound. And again, of course, this is what I talked about. Affluent buyers have stock market wealth, and that is causing them to be very, very nervous. Interestingly enough, coastal cities are being hit the most. Woo! Nassau County, New York, Long Island. Wow, down 65%. California, San Diego down 60. Oh, wow, look at that. Woo! San Diego, San Jose, Riverside, Anaheim. Yeah, these are very high price market. Looks like their Redfin is trying to paint the story that homebuyer demand is coming back. This really is interest rates. We had 6 weeks of interest rates decline. Don't know if that will be true this week for a seventh, but we will see tomorrow. Again, this is some interesting stuff. What do we got here? Yep. Basically, we are looking for the marginal home buyer, right? When interest rates fall, we're pulling off folks from the sidelines. Again, if you're buying in these expensive areas, you're definitely getting a jumbo loan. It is interesting for me to look at that jumbo loans are actually cheaper on an interest rate level than some FHA and VA products. I thought that was interesting. Looks like luxury home sales jumped most since 2016. Ooh, look at this. Oh, this is supply. Nah, see, you tricked me. This is not sales. This is supply. Again, what we are actually seeing, folks, is less demand, less supply, leading to more days on market. Look at this. Luxury is up, non-luxury down. The move-up buyer is dead. This is what I keep talking about. If you are shopping for a luxury home, as I've said many times the last month or so, you are going to have your pick of the litter. If you are shopping in the move-up market, it's tough. Nobody's selling. And then if you're a first-time home buyer, it's really tough out there. There's just not a lot of listings. Year over year, down 3%. Look at that. Non-luxury down 20%. Where are the listings? And I think some of these listings are fake. I think there's a lot of people with 6-month listing contracts that aren't dropping price and thus aren't real. Prices continue to ebb. They're only, they're up 10% year on year, looks like. Man, look at that. Woo. That's not healthy. We got this, all this has got to get whacked off. All right. So where are home sales? Luxury home sales fell in every metro. Yeah, we talked about that. Supply rose in 21. Texas, up 51%. Active listings of luxury up in Texas, folks. Look at that. Texas, Denver, Nashville. That's interesting. And then you had some declines. Wow, look at that. That's interesting. So that's supply. Listings fell in 39 metros. Oh, that's just people taking off the market. Prices, all but one metro. Prices are up in all but one metro. San Jose is down. I think this chart's amazing. So the market summary for metros in 3 months ending November 30th. Home sale down, listings down, listings change, median price. Damn, Anaheim 3.7 million. Guys are living good. Where do we got? What other areas do I know? Let's take a look at Bay Area. What would they call it? Santa Clara, maybe? They're probably going to call it San Jose. Let's look at San Jose. 5830. Wow, $4 million. Oh, that's nice living. I don't live anywhere near a $4 million home. Wow, that's crazy. Crazy. All right, folks. So again, luxury is in trouble. Let's finish this up. I don't know if this article continues. Oh, non-luxury. Let's go to San Jose again. Yeah, the prices are up. Man, 1.3 million. Crazy. Crazy. Yep. So this is done by Lily Katz. Lily Katz, great job. Thank you very much. Nice job at Redfin. All right. So again, remember, I talk about the housing market, Redfin, Realtor, Zillow. But for you, it's what's happening in your market. what's happening specifically in your buy box. I disagree with Redfin. I can't believe they actually said high-end homes. Think about that. A $4 million home in San Jose, are you really going to have that be a rental property? I don't get it. I think that's just wrong. I'd love to see the data behind that because maybe I'm missing something, but I doubt it. Folks, at the end of the day, there is no one housing market. If you're a real estate investor, I strongly suggest staying below the median. We only do cash flow positive deals day one. We are not betting on appreciation. We also have a risk-adjusted return that, roughly speaking, is 5%. If you're going to get a 3 or 4% return on a property, why bother? Go get a 10-year debt at, I don't know what it, or 10-year note at 4%. Risk-adjusted return has changed. But at the end of the day, there are motivated sellers out there. Do the work. Go find them. Have some fun. Take care. Bye-bye.